All right. Welcome, good people. Welcome to the channel. So today we're going to cover calls, ETF SPY, and the ticker Palantir, PLTR. And we're going to conclude these contracts expired today. Let's get to it. All right, so we all logged in Robinhood. Now we're going to check out some of these covered calls that I'm currently in. So we're going to cover the ETF SPY, and currently this is the 615 call that I'm in. It's currently going for 9 cents. It expires today though. So I got a credit of 28 cents. Now, as you do know, that this represents 100 shares, so that's times 100, so it's $28. And right now that contract's worth $9, so my total return is $19. It doesn't sound like a lot, but I've been doing this for a few weeks now, and I also been doing this a couple of times a week because SPY trades daily. So currently, at the time of this recording, and as you can see, the stock market is open before you see those numbers fluctuating. SPY is currently going for 609 and change. Now, let's see where I got in at. So you see my average cost is $554.66. I have 100 shares currently. And my total return is $5,496. Now, if you've been keeping up with the series, SPY was down a whole lot at one point. I believe it dropped down to like 590, somewhere in there. So now back to this contract that I sold to the market. Now it's going for 8 cents, but it does expire today. So here's a couple of ways this can play out. I can let it expire worthless and get the full credit, or I can buy it back right now and resell another one further out in time. So what I'm going to do right now is I'm going to let this roll a little bit more. Well, then again, no, I'm just going to close this out so I can get into another one immediately. So as you can see, I'm buying the close. I'm willing to pay 8 cents, or times 100 is $8. Now the max cost is $8.04 because Robinhood charges a 4 cent charge per trade, or per contract, my mistake. We'll review the order, and here you can see where it says I'm paying $8 to buy back one open contract, which will release my collateral and obligation to sell my 100 shares of SPY for $615. I'll submit that, and you can see it filled. So now I get to do it again. Okay, so see here where it says trade SPY options. This is exactly what I intend to do. The options chains pull up, and we're going to sell a call. Got to be careful when you do this. You got to make sure that is set for your intentions, because there's been a few times that I almost bought calls when I was trying to sell them. All right, if you gained any value from the content, please like, share, and subscribe. Soon enough, there will be an ebook in rotation. I'll let you know when it drops. Now let's get back into the video. All right. So we're going to cover one more. This is Palantir. The ticker is PLTR. And I sold a $90 call. It's currently going for 22 cents. Now let's take a deep dive into this. But first, before we look at that contract that I sold, we're going to look at how much Palantir is going for currently. At the time of this recording, it's going for $78.98. but the market's still open, so that's going to fluctuate a little bit. Palantir, as you see, also has earnings, and I'll explain that in a second. My average cost is $70.90, but if you've been watching the series, I was down at a point. Palantir had dropped to like $65, I think. So this is my total rate of return here. It's fluctuating 811.05. Well, it's fluctuating because the market's still open. So what that means is, if I was to sell today, I would profit $813. Now we back to the contract that I sold. Now this contract expires the 31st of January. I received a credit of $40. Currently, total return on that contract is $18. The current price for that contract is $22. So overall, what this contract means is, if Palantir by the 31st, which is next Friday, goes to $90, I could either sell it, walk away, or if it doesn't go to $90, I get to keep that $40 premium, and I get to sell another contract further out in time. Now, as I stated before, I have every intentions of keeping Palantir. So here's a third option. I can do what's called a roll, meaning I could sell this contract for whatever price it's going for at that time and roll into another week. I'll show that if it comes to that, and I actually have to do that. Oh, and just hypothetically, if this was to go to $90, the difference between where I got in at $70.90 and $90 is almost $2,000. So that's kind of a good look also. So now, my whole objective as far as covered calls are concerned, I'm attempting to get a 30% return for the year, be it 1% a week for 30 weeks or 4% a month. That's my personal challenge. So in closing, I'd like to say, if you watched to the end, thank you for sharing your time. And I am not a financial advisor. Do your own due diligence and research before investing into the stock market or anything for that matter. If you liked what you saw, once again, please like, share, subscribe. Till the next one, where I'll be showing you what happens to Palantir and SPY when they expire, which will be next week, the 31st. But maybe I'll make some videos before then. Till next time, love you all and peace.